Okay. Hi, everybody. Michelle Fernandez here, Colorado Realtor, helping my friends and family with the purchase and sales of real estate. So I am with Propertyville Inc., which I am the CEO of this S corporation, and I do hang my license with HomeSmart Realty located in Greenwood Village in Colorado. So the purpose of this video is to go over a couple of things that I believe to be very educational for those that are in my network, just kind of going over some tidbits regarding mortgage news, national news. I wanted to explain a couple items with regard to how most buyers and sellers are getting to the closing table at this time. So bear with me because I have a lot of data, and this is going to be somewhat of a long video, so let me just give you the preface for that, but let's jump right in. If you have any questions, you are always more than welcome to shoot me an email, sellwithmichelle@gmail or propertyvilleinc@gmail. So let's start off with some national news. This I found to be extremely informative. The National Association of Realtors, which is an organization that a realtor has the choice, or an agent, I should say, has the choice to pay an additional fee on an annual basis in order to be to hold an affiliation with this organization. So I am part of the NAR association, which, what exactly do they do for me? It's I like to be part of the association. But they just came out with a statistic, and it says that the annual profile of home buyers and sellers showed that first-time home buyers made up 26% of buyers. So that's down from last year's 34%, sorry. And it also showed that the lowest share of first-time home buyers since the data was collected began. So this report showed that your typical first-time home buyer is 36 years old. So for those of you, I'm a bit older than that, but for those of you that are looking into home ownership, I mean, that's just definitely the pathway to go, and you are on the right track. If you own your first property, don't stop there. You want to begin to think about real estate as a portfolio expansion. So although you purchased that first property, maybe in a couple of years you outgrow, on average, most buyers only live in the property for 4 to 7 years, and then they move up. So hold on to the property if you can, use it as a rental and make some income. You know what the rental market looks like. We've seen rental rates increase, and that's a market that will always be there. Okay, moving on to the mortgage news, and I'm going to kind of jump around, so just bear with me. I'll get better at this as I do more of these videos over time. But with regard to mortgage news, an interesting stat that just came out is that in 2023, the conforming loan limits for Freddie and Fannie were just announced, that for a one unit, it has increased up to just over $726,000. So in 2022, it was roughly around $647,000 for purchase price. So that is pretty significant. And what exactly is a conforming loan? A lot of times we hear these terms, and unless you are in the real estate industry, these terms mean absolutely nothing to you. So I thought I should touch on what does that mean exactly. So basically a conforming loan are those loan products that conform to Freddie and Fannie Mac's guidelines. So there's typically they are stricter than those that are non-conforming. They have to go through an underwriter process, and at that point they sell those loans to investors, or let me back up. So the lenders underwrite and fund the loans, and then they sell them to the investors such as Freddie Mae and Fannie Mac. And then once those have been scrutinized, the loans are then sold to investors on the open market. So because of their liquidity, they have very strict governmental restrictions, and they typically have lower interest rates than non-conforming loans. Stay with me. This can be kind of boring stuff, but for those of you that are interested, thank you for holding tight. Who are Freddie Mac and Fannie Mae? So those are terms that you hear a lot, especially if you are looking into home ownership. Those are basically federally backed home mortgage companies that are created by the United States Congress. Neither of those institutions originate or service their own loan mortgages, but instead they buy and guarantee the mortgages, and they're issued through lenders in the secondary market. So if you've purchased a home in the past, or if you've refinanced a lot of times, more frequent than not, you will have noticed that the original entity that you went through, maybe months later, a couple months later, you'll get a letter in the mail saying this is now your new servicing provider. So that's basically them taking that initial loan and selling it onto the secondary market. Nothing changes with the terms of your agreement as far as with the original loan originator. Those terms will remain the same. It's just a new servicing provider that you are paying and that purchased the loan. And that's basically kind of how banks are able to, keep the funds available to continue to lend to borrowers, is by selling off those loans to secondary markets. How exactly do conforming loans work? Well, when a buyer is looking at their mortgage options, basically different types of conforming loans are going to be considered. Your FHA, your VA, your USDA, those are all conforming to the government's guidelines, right? I mean, there's so much to know about different loan products, which if you have further questions, you definitely want to reach out to your trusted lender. So this is just kind of a general overview, but basically the conforming loans have stricter guidelines, as I've already mentioned, and you will pay for a mortgage insurance. So PMI, excluding the VA loans, which is a huge benefit. I try to do a lot of marketing for those of you that have the VA home loan. That's one of the greatest benefits, is you don't have to pay the PMI insurance. We'll get into that later. I know I'm going over a lot of information, but basically the PMI insurance, it's just basically a portion piece of your monthly mortgage that you're paying to the bank because they consider you a high risk. So if the event comes into play that they have to foreclose on you because you are not making your mortgage payment, you are paying the bank insurance to be able to foreclose on you. So if you are able to increase your credit score, minimize your debt ratio in comparison to your income, then you hopefully want to get into a conventional type of loan situation if you can, because you're saving yourself that PMI insurance. Over time, that can begin to go to your principal, right? Which is the ultimate goal. Secondary market. Okay, so what exactly is a secondary market? I've kind of lightly touched on it. Basically, the secondary mortgage market is a marketplace where the loans are serviced and the rights are bought and sold in between lenders and investors. So, if, like I said, if you've refinanced or purchased a home, you've probably noticed that they've sold your loan. The investors will purchase these mortgage-backed securities as shares through the secondary market, and that's ultimately who you're paying your mortgage to. And moving on to rental news. Again, this is all for the Metro of Denver, Colorado. This is an interesting fact. The real estate market is still competitive in the single family market, while low-dough lofts and condos are taking longer to lease. While there's a lot of variables and a lot of factors with regard to what's going on in downtown, we don't really want to get into like the socioeconomics of what's happening across not only Denver, but across the board in terms of mental health, addiction, homelessness. There's a crisis going on. That's for another day and another topic. But moving on to multifamily license applications are due at the beginning of January 1st in 2023, while single family license applications are due in 2024. So if you are looking to become a landlord, you must obtain a license in order to do so, and you are required to hire a third-party inspector to inspect the properties. And this is some of these requirements pertain to the egress windows, basement units, fire extinguishers, carbon monoxide detectors, the GCFI outlets in the bathrooms. Basically, we want to prevent the slumlords that some of us have witnessed, some of us know them. And so I think this could be a good thing. If you're going to have a rental, you're going to have to take this very serious and provide a property that's going to be safe for those tenants, because there is a lot of liability that comes along with being a landlord, and rightfully so. Okay, so kind of something else that you hear a lot about, whether it be in the news, on social media, you hear lenders or realtors talking about the sellers are offering 3-to-1 buy downs or 2-to-1 buy downs. We'll talk about that in a moment, but also with the new construction homes, they are also offering the 3-to-1 buy downs to help buyers overcome the higher interest rates that we've all witnessed here recently. If you have questions regarding that, just reach out to me and we can talk about that. Something else that I believe you should know is there are a lot of down payment assistance programs right now that are significantly helping buyers. There's one in particular that I've already helped 3 clients with, and if you're interested about that program, they're giving up to $25,000 to a new buyer to help them with their out-of-pocket costs, closing costs, down payment assistance. So it's a very unique program, and there are some great programs out there. Let's see here. I had to write myself an outline because this is a lot of information, and so thank you so much for holding tight. What exactly is a 2-to-1 buy down? Again, 3-to-1 buy down, 2-to-1 buy down, essentially the same thing. It just that number represents the year for how long you would have this help. So because of the inclination of interest rate raises, we've seen lenders kind of trying to supplement that increase to help buyers, because it did kick a lot of buyers out of the market in terms of affordability. So we have to get very creative. You have to move with the shift, and you have to think strategically. Lenders have to be strategic. Home buyers, home sellers, realtors, it's just kind of shifting and reorganizing your strategy. So this is basically the gist of it. You'll see a lot of lenders and home sellers incentivizing buyers with the 3-to-1 buy down. And how it works is they're basically giving you a concession. So the seller is giving the buyer a concession. And so you get a lower interest rate for year 1, year 2, and year 3, if that's what you are doing. And that money, the concession that they are giving you, it sits into an escrow. It's a third-party escrow. And they basically say, okay, for year 1, your interest rate is going to be this lower interest rate. And then they're taking so that's going to bring your monthly mortgage payment down, right? And so they're going to take some of the concessions that are being held in that escrow to supplement the difference. So it's basically a concession that sits in an escrow account, and then they apply it as needed. If you have more questions, I would prefer you to reach out to a lender, as I don't do the underwriting. I'm not a lender, but that's kind of the gist of what I'm seeing. It's very helpful. It's very beneficial. It doesn't work for every buyer. Every buyer has their own significant needs. So just know that you have options. You can also, if a seller is willing to give you that concession, you could also take that and let's just say they're willing to give you $10,000 concession. You can ask them for a $10,000 price decrease in lieu of that concession, but it's going to depend on your unique situation, and that's going to be something that you'll have to work out with your lender. And so pretty much that's all that I have for today. I will put out some more content videos for you. If you have any questions, please feel and reach out. I was speaking to to an investor friend of mine earlier today, and I asked him, because he purchases and he holds properties. He just acquired a rental in Inglewood, Colorado, and he bought it for $250,000. And I just asked him, in his perspective, is there anything that he thinks that the general public should know in terms of purchasing investment properties? Because sometimes we kind of forget that we're in the game, and like, what are things that we should be educating. So he just felt that when he's purchasing investments, some of the things that he looks at are the age of the hot water heater, the HVAC systems, because those are going to be expected costs. He also did mention that, there's a lot of shitty inspectors out there. And so he felt like, that is a vital piece in obtaining his investment properties. And don't get attached to the product. It's an investment deal. You have to think in terms of numbers, not emotion. And I would say that would be the same also for just your typical traditional home ownership as well. Although it's a very emotional process. And so he did recommend his lender. His name is Larry Weishart with Country Mortgage. He felt that he saved him a ton of money because he does a lot of the upfront work beforehand. So he kind of just like does the whole financial analysis, and they break down the loan in terms of cost and whatnot. So that was an interesting call. But if you are considering home ownership, and if you have any questions, I would love to be considered a resource. I know with the increase of interest rates, that can scare off a lot of buyers. But one thing that you want to consider is we've only seen 2 declinations of home values in our history here in America. And that was during the Great Depression. And then again, and those are significant declinations as far as, values. And I mean, we hit some global recessions, right? During the Great Depression, like you felt it on every aspect. Well, I didn't, but my grandparents did. And so, and then again in the year 2008. So right now we're in a global recession. We see inflation. We're just trying to kind of slow down the purchasing to kind of normalize and make everything somewhat even balanced, right? So if you are in a position to where you can purchase real estate, I would say to explore that option. Although the interest rates are a little bit higher than what we have witnessed in the past 2 years, your agent can strategize and figure out some other options that will help you depending on your specific needs. There's, a lot of the stuff that we just talked about, but some of the buyers that I'm helping, we're getting back. Sellers are willing to negotiate with buyers right now. And so in terms of it being an even playing field. I definitely think that we are seeing more of an even playing field for buyers because it's been very unfair in the past couple of years. And explore your options if you are interested and if you have questions. I'm always here. I love to help. I love even if today or this year is not the year that you are ready to purchase. Let's jump on a phone call. We can jump on a Zoom and we can kind of go over your options. We can meet with the lender and see really what the overall plan is. I always say a resourceful lender is the most vital key component of any real estate deal because the end of the day, um, it's the finance piece that could make or break the deal. So reach out. I'm always here, Michelle Fernandez. I will include my contact info on this video and thank you so much for watching. I'll talk soon. Bye-bye.